America. In other words, America is trying to survive on the backs of our college kids. If that's not criminal, I don't know what is.
Robert Kiyosaki, renowned for his bestseller Rich Dad, Poor Dad, recently voiced concerns about the global economy. He predicts an imminent event that will hasten the de-dollarization trend worldwide. As economies evolve, understanding these shifts becomes crucial for financial foresight. Let's explore Kiyosaki's insights further. The BRICS summit, which took place on August 22nd, drew significant attention, especially with representatives from Brazil, Russia, India, China, and South Africa set to discuss pivotal economic issues impacting their collective interests. Robert Kiyosaki, the acclaimed author of Rich Dad, Poor Dad, made bold predictions regarding this summit. He suggested that the BRICS nations might unveil a new trading currency backed by gold. This assertion gained traction when Kiyosaki tweeted about the potential introduction of a new currency named BRIC, which he believes could be valued at a staggering $3,000.
I think there's a bigger story to tell about the BRICS. It's almost 3/4 of the world's population have signed on. So there was only the Brazil, Russia, India, China, South Africa, but the big one is Saudi Arabia and Iran. Now, the reason that's important is they hate America.
He even hinted that up to 41 nations might rally behind this initiative to dollarize the global economy. However, there is a twist in the tale. Contrary to Kiyosaki's predictions, official statements from some of the BRICS nations prior to the day of the meeting refuted introducing a new currency. In a statement to Reuters, a South African official clarified that there's no BRICS currency on the summit's agenda. Similarly, an Indian official emphasized the absence of plans to introduce an alternative to the US dollar. So, Kiyosaki has always been quite vocal about the US dollar and its place in world trade. He feels it is losing its touch a bit. And you know what is interesting? He's been telling folks to consider investing money into gold, silver, and even Bitcoin. Not because he's against the dollar, but he believes these assets could be a good safety net if the dollar ever takes a dive. That is a pretty neat perspective, right? Anyway, it's always cool to see different viewpoints on this. Now, not everyone agrees with Kiyosaki. Some big shots in the economic world believe that the whole US dollar losing its charm thing might be blown out of proportion. An article from CNBC in April referenced some numbers from the International Monetary Fund. And guess what? According to them, the US dollar is still king in global trade. It is the leading player in a huge chunk of all currency exchanges. So, there's that side of the story too. It's always good to get both sides, right? Kiyosaki's predictions and the subsequent official refutations highlight the complexities and uncertainties of global economic dynamics. While the idea of a new global currency is intriguing, it is essential to approach such predictions with a balanced perspective, considering the myriad factors influencing global economic decisions. While the BRICS summit has already approached and taken place, all eyes have been on the nations that participated and the resulting outcomes of their discussions.
They're joining up against the Western currency called the dollar. And so the BRICS is not if, it's only when. Jim Rickards says it best. It's not if, it's when they switch to gold. That's what they're saying. I agree with him.
Scheduled in Johannesburg from August 22nd to 24th, notable attendees included South African President Cyril Ramaphosa, Chinese President Xi Jinping, Brazil's President Luiz Inácio Lula da Silva, and Indian Prime Minister Narendra Modi. However, Russian President Vladimir Putin attended virtually due to legal complications. Key topics on the agenda included: 1. BRICS expansion. There has been a debate on expanding the bloc, with over 40 countries showing interest. While China and Russia support expansion, Brazil remains skeptical. 2. BRICS Bank. Discussions revolved around boosting local currency fundraising and lending within the new development bank, NDB, to mitigate foreign exchange risks. 3. Economic cooperation. Leaders aim to enhance economic ties, discussing trade, investment, energy cooperation, infrastructure development, the digital economy, and job opportunities. 4. Friends of BRICS. The summit also engaged with leaders from other regions, emphasizing the relationship between BRICS and African nations, aligning with the theme BRICS and Africa. This summit showcased the collaborative efforts of these major economies to address global challenges and strengthen their ties. However, at the end of the summit in Johannesburg, a significant development was the announcement of 6 new members joining the group: Iran, Saudi Arabia, Egypt, Argentina, the UAE, and Ethiopia. This expansion, described as historic by China's President Xi Jinping, aims to amplify the voice of the Global South in world affairs. However, analysts believe the diverse nature of the new members might challenge the group's unity. While the move is seen as symbolic, it indicates a shift in the global order, with BRICS nations seeking to provide a counterweight to the US and its allies. For countries like Argentina, facing economic challenges, BRICS membership offers new opportunities for economic collaboration and market expansion. This expansion signifies a broader global economy and population representation, emphasizing the group's growing influence. Whether Kiyosaki's predictions come to fruition or not, the summit was said to be a significant event with potential implications for the global economy. There has been a lot of chatter about the potential decline of the US dollar's dominance in the global economy, but let's dive into the facts and expert opinions to get a clearer picture. Firstly, many experts believe that the fears surrounding de-dollarization are vastly exaggerated. The US dollar has been the big guy in global finance for, well, a long time. Why? Well, the US has this massive economy, loves to trade, and has super solid laws, especially around property rights. Plus, US financial markets are the go-to place for depth and liquidity. Now, let's talk numbers. According to the Bank for International Settlements, the US dollar is involved in 88% of all global currency transactions. That's almost like saying 9 out of every 10 times someone's making a deal in the world, they're using dollars.
Just know what is happening outside of the United States, because there's more US dollars outside of the United States than there are inside of the United States, held by other countries as trade goes on, because most of the world's trade is in US dollars. So one of the things that you might want to Google is what countries have been loading up on gold in the last couple of years, and you'll see that all of these countries that are in BRICS have been doing that. So in other words, they're trading in their dollars.
Crazy, right? Whether you're doing business in the Americas, Asia Pacific, or anywhere else, the dollar is like the popular kid in school. Even in places where the euro is the big shot, like in Europe, the dollar still has a lot of influence. Central banks? Oh, they absolutely love the dollar. The International Monetary Fund, IMF, has some wild stats. As of early 2023, the dollar was 55% of all foreign exchange reserves. For a little flashback, in 2022, it was 58%. The dollar is way ahead compared to other big names like the euro, yen, pound, and even the Chinese renminbi. It's like the superstar of reserve currencies. But why do central banks and foreign entities hold such vast amounts of US dollars? A big chunk of it is in US Treasury securities. By the end of 2022, foreign investors had a mind-boggling $7.4 trillion of these securities. And this love for the dollar isn't just about numbers on a screen. People worldwide have dollar banknotes tucked away because they trust it. It is like having a reliable old blanket. And there is this thing where many countries hitch their currency's value to the dollar, like tying a boat to a dock. Over the last 20 years, this has only gotten more popular. By 2015, half the world's GDP came from countries doing this. So, when looking at the big picture of global money matters, stuff like buying things internationally, global banking, or even borrowing money in a different currency, the US dollar is like the popular table everyone wants to sit at during lunch. It is just that well liked. Now, the world is always changing, and there is no telling what's around the corner. But if we are making bets on the future, the US dollar will likely hold on to its top spot for a while. At least, that's how the chips are stacked right now. Its historical strength, coupled with the current data and expert opinions, suggests that the dollar will continue to play a pivotal role in the global economy. So, while keeping an eye on emerging trends and potential shifts is essential, the US dollar remains king for now. Kiyosaki also has a history of making bold predictions about the financial markets. His forecasts, often leaning towards the pessimistic side, have garnered both attention and criticism over the years. In 2021, Kiyosaki made headlines with his prediction of a massive market crash. He believed that the real estate market, in particular, was on the brink of a severe downturn that would surpass the devastation of the 2008 Great Financial Crisis. His rationale was rooted in the belief that the market was overheated and a correction was imminent. He advised investors to steer clear of the real estate sector and instead focus on tangible assets like gold, silver, and even cryptocurrencies like Bitcoin. Fast forward to more recent times, and Kiyosaki's warnings have become even graver.
Not ETFs, buy gold, buy silver, the real stuff.
And I'm going to add, you like Bitcoin too, though.
I like Bitcoin because, well, we have an enemy in common. It's called the federal government, the Treasury, the Fed, and Wall Street. I don't trust them. If you trust them, save dollars and get yourself a nice bond.
He has been vocal about the possibility of an economic depression and a significant stock market crash in the US. In one of his tweets, he mentioned, "Greatest real estate crash ever. 2008 was the GFC. 2023 will make 2008 GFC look like nothing." He further elaborated on the declining value of office towers in major cities like San Francisco and pondered their future utility, suggesting they might be repurposed as homes for the homeless. Kiyosaki's predictions continue beyond real estate. He has also expressed concerns about the broader economy. In another tweet, he stated, "Giant crash coming. Depression possible. Fed forced to print billions in fake money." He went on to predict that by 2025, gold would be valued at $5,000, silver at $500, and Bitcoin at a staggering $500,000. His reasoning? A loss of faith in the US dollar and the proliferation of fake money. While Kiyosaki's predictions are certainly alarming, it is essential to approach them with a balanced perspective. Many factors influence the financial markets, and predicting their movement with absolute certainty is challenging. Moreover, while some of Kiyosaki's past predictions have borne fruit, others have yet to materialize as expected. While Robert Kiyosaki's doomsday predictions provide food for thought, investors should always conduct their research, consult with financial professionals, and make informed decisions based on a comprehensive understanding of the markets. With Robert Kiyosaki's recent predictions about an accelerated de-dollarization of the global economy, many are left wondering, how can one prepare for such a shift? Here are some actionable steps to consider. 1. Diversify investments. Diversified investments are crucial if you want to survive in these recent times. It would be best to consider diversifying your portfolio across various asset classes, including stocks, bonds, real estate, and commodities. 2. Invest in tangible assets. Kiyosaki often emphasizes the importance of gold, silver, and other tangible assets. These can act as a hedge against currency fluctuations and economic downturns.
I save gold and silver. I don't save dollars. I'm very much a hard asset person. I own oil wells simply because oil is energy and economies run on energy.
3. Explore cryptocurrencies. While they come with risks, cryptocurrencies like Bitcoin have been touted as potential alternatives to traditional currencies. Do your research and understand the volatility before investing. 4. Stay informed. Keep abreast of global economic trends and shifts. Being informed will allow you to make timely decisions and adjustments to your financial strategy. 5. Limit debt. In uncertain economic times, it is wise to minimize liabilities. Focus on paying down high-interest debts and avoid taking on unnecessary new ones. 6. Build an emergency fund. Ensure you have a safety net. An emergency fund can provide financial stability during economic downturns, allowing you to weather the storm without making hasty financial decisions. 7. Consult with financial professionals. Consider seeking advice from financial advisors or experts who can provide guidance tailored to your circumstances. In conclusion, while the future of the global economy remains uncertain, being proactive and prepared can help mitigate potential risks. Remember, it is not about predicting the future, but being ready for whatever it holds. So, that's all for today. If you enjoyed this video, hit the like button and share it with your friends and families. Kindly subscribe to our channel and don't forget to click through this video for more content you wouldn't want to miss. See you in the following video.